live show. Today I'm on the road. I'm actually in Florida. Today I'm in DeLand, Florida right now in a hotel, as you can probably obviously see. And I just hopped out of the shower. I was actually working all day on a new flip project we're working on down here. My brother and I were grinding it today, and I was physically out in the field doing the work. I was up on the roof, in the attic, framing, doing all this kind of stuff. And it's a cool little project we're working on. So kind of exciting. Just enjoying time in Florida too it's nice to just get away on vacation, even though it's 109 degrees here and the humidity has been brutal on some of the hottest days. Today wasn't so bad, but you're just soaked by the end of a day. So yeah, I had to hop in the shower really quick. Literally drove back from there. It's an area where it's relatively remote, so the service isn't fantastic. Need to get a great internet connection, and because the place is obviously torn apart, and the previous owners, we had it for a great deal. Bought the property for 130 grand, so it's a really good property with an ARV of like 300. So great little property. Has a big in-ground pool. It's like 8 feet deep, all in screened lanai, wraparound driveway. The house is gonna be a 4-bed, 2-bath. There's a guest house as well, detached, big garage, an RV port. It's got 2.5 acres of basically jungle. Literally, like, we got there and there's jungle and there's like snakes and things. We're cleaning it all up and turning it into a beautiful sort of estate vibe that it has the potential to be. So yeah, that's always cool. Well, I don't know how this light turns on. I can't turn it on, it doesn't work. Thought I could turn on a face lamp or something, but this light doesn't seem to work. Yeah, so we're down in Florida. We drove down in our new van that we picked up, the Honda Odyssey. I gotta say, I just gotta like throw out a plug. We got I think it's 2016 Honda Odyssey, and it's great on fuel. I was hypermiling, so when you're going up the hills, you're just slow, keeping your RPMs below 2 at all times, ideally. Trying to follow people down to suck their wind draft current. The tank, though, is a lot to fill up, was 1,000 kilometers a tank. We got 1,000 kilometers on a tank. That's 10 hours of driving before I had to fill up. I was pretty impressed. Lots of space. It was great. We don't use cruise control because that's not hypermiling. That's not efficient. I drove the whole way by foot for like an hour. For like an hour I put on cruise control in a straightaway. But you want to use the hills to go way down fast. You go 140, 150 on the hills, and then you let it slowly coast up. And I was able to get some great fuel economy and fill up along the way, so that was fun. What else has gone on in the last week? We've had some, by the way, let me know if the internet here is okay. I just connected to the random public Wi-Fi. I probably could have went down to the front desk and asked them for a more private connection, so it's faster, but here's what it is. Yeah, what else has gone on this week? So we drove down to Florida. I've been in Florida for a few days now. It was an eventful drive. I actually brought the family with me, so my wife's here helping out. She's cleaning and basically watching the 3 kids. My daughter actually got the paintbrush going. So it was cool to get her involved, and now she's 6. So it's nice to get her involved in the process and teach her what Daddy does. Even though I don't do a lot of the physical renovation anymore, it's nice for a few days to do it, because you get one of those situations where, if you really put yourself in deprivation, and this place will be a beautiful gem when it's done. Currently, like, they had 10 dogs trapped in the house and a bunch of furniture and all this other stuff. So they left it with like literally like a layer of shit on the floors everywhere, smeared on the wall. I don't know how someone was living here. We actually had to, they stayed after closing for a week, and we had to get them evicted. We're like, hey, you don't own the house anymore. You've been given the money now. Time to leave. So that was an interesting process here. In Canada, I'd never had a homeowner stay in their home. I've had tenants stay in a home before or whatever, but never a homeowner. So that was an interesting experience too. Just learning lots, experimenting, having fun. It's a good little test project. It's my second ever test project in Florida, and I think this one's going to be a 6-figure hit. And so I'm excited about that, and I want to roll that into more deals and start doing some more stuff down here. But I like to dip my feet in the waters, build the systems, learn the environment. It's a different environment down here. As an example, roofs down here require permits and are extremely complicated because of the hurricane, wind testing, and all of that. Whereas back in Canada, like, any Joe Blow can throw on a roof for like 3 grand, and it doesn't matter about the high winds. So it's, just nail the shingles down, no big deal. Here, you put on a metal roof ideally, and there's a different process. So I'm just learning some of the differences, but construction-wise, it's all the exact same. Framing a wall is the same thing. Electrical's all the same, plumbing's all the same virtually. Yeah, so it's all the same old stuff. But my favorite part of a project is going in and saying, okay, it's a 2-bedroom now. How do we convert it to a 4-bedroom? In this case, that's what we're doing. In the guest house, it was an open studio. There's no kitchen, super grimy. We're like, can we make this into a 1-bedroom, put a kitchen in it, make it proper? How are we going to lay this out in a way that is more appealing? Because right now it's just kind of a weird little room. And how do you take a space and turn it from being worth 100 grand to being worth 200 grand? And it's like $10,000 in small revitalizations, strategically planned out. Like a wall, as an example, can turn and a kitchen is easy if there's plumbing. There's literally plumbing roughed in there. So all we do is just connect off the laundry and upsize the pipe, which is nothing. And now we have a kitchen. It's a 1-bedroom apartment now, as opposed to being a room, a guest room. So little things like that, we're making huge improvements to the property to squeak out some extra value. And we might end up owning this property, undecided at this point. It's a beautiful jungle retreat. It's like 30 minutes to most of the major stuff, about an hour and a half to Disney. So it's more for someone looking to do fishing or enjoying a lot of the lakes around there, or going to like Juniper Springs and doing the spring thing. You're an hour basically from either coast. So it's a nice little retreat for someone. Could be an interesting property. If anyone's watching this and they're like, hey, I'm looking for something with a guest house and a main house and secluded, not like there's neighbors, I guess. I can't say secluded, but like 2-acre lots. So you've got some space. You do have neighbors and stuff, and it's a paved road right up to it. But if anyone's looking for something like that, it's a cool little property. It has well, and it has septic, so you don't have any connection fees. There's no gas. It's just a hydro bill. And the property taxes are super low. So it'll be a nice little property for someone who is, especially if you had an RV, because it's got a huge RV port, a covered RV port with water and septic and hydro all hooked up and ready to go, and 300 amps of power. 200 plus another 100 amp panels. So 300 amps of power, which is interesting. The property is definitely a huge value add, and we're excited for the project. But anyway, what else is going on in my world? We did an assignment today. It's closing back in Canada. I've got another property closing on Friday. It's a beautiful play on the water near Lake Huron. It's got 2 cottages on it, a couple $100 grand of upside there as well. Oh, it's a little projects on the go. Still chugging along. This is like the life I like. I love real estate. I'm going to look at a bunch of properties. Tomorrow and the next day, I'm looking at a property, each one larger multifamily. And I'm just I'm down here in Florida. I'm like, let's tee up some more deals for the winter and see if I can eke out a good deal. Right now, with interest rates being so high, a lot of people are priced out of the market. There's just a lot of fear with crypto having fallen, the stocks having fallen. Although the last 3 days has been a crazy rally. I wish I'd captured that. I've been working, so I didn't even have wasn't even checking my stocks really, just in the morning really quick. And I, before the vacation, didn't want to have what happened to me in January. In January, I didn't have any short protection on, and I watched my account drop. Now I'm heavily shorting. I actually have a negative delta right now. So as the market rips up, I'm going, I'm almost flat. My account hasn't moved a whole ton, but I gotta say, stock-wise, guys, if you're watching this right now, I think it's a good time to start exiting your longs, taking some profits as things rally. It's a dead cat bounce. We are going for further lows. It's for sure. Crypto has not seen the bottom. The stock market hasn't seen the bottom. Interest rates are rising. Inflation's at all-time highs. There's a bit of a relief rally, but things are going to get worse before they get better. Companies haven't started laying off yet. Cars haven't started being repoed. Houses haven't started going into foreclosure yet. The comps for houses are still 4 months delayed. So stuff that's closing now at really low prices, we won't know about that for 3-4 months, which will then trigger even lower prices once those new comps come out, right? The stuff closing right now was sold in the highs of February for the most part. And so a lot of the data appraisers have and that real estate investors have and realtors have is lagged. So real estate's a lagged thing. And in the stock market, I think there'll be more pain as we try to get inflation under control. It will lead to companies laying people off. It will lead to basically the only way for them to fix inflation is, 2 things. 1, if they can fix the supply chain issues, and 2, the war stuff going on. If that can come to an end, that would help. But supply chain issues is a big piece of it. But really what they're going to do by raising interest rates is crush demand. Demand for you to spend money on trips, for you to be able to afford to buy investment properties, for you to, buy a car, whatever. And if demand falls, then companies are forced then to lower prices. Inflation is under control. So that's one of the levers that they're pulling, and they're pulling on it pretty hard. Bank of Canada just announced a 1% rate hike. We were expecting 0.5 to 0.75%. So that was a bit of a surprise, a bit of a shock to the market. Crazy times we lived in. I didn't think the government would ever let inflation get to 8 to 10%, call it 15% real shadow inflation ever. I didn't think that the government ever let that happen. I also didn't think that in the same breath, the government would let interest rates float to 6, 7, 8%, which they are doing right now. So I didn't think they could sustain the debt. There's a certain point where the system breaks, where all of the debt, like people are the most indebted they've ever been. The average consumer, even businesses are levered up to the tits because it was so cheap to lever and so easy to get money that a lot of the ramifications of these increases, if they are prolonged, the longer it lasts, these high rates, and the longer we continue the tightening fiscally, the worse it's going to be, right? And so I think that the effects of that are coming in the next 9 to 12 months, which is again why I am neutral on the stock market. I'm not long, which normally, like, you know me, over a 10-year period, I'm very long on real estate, I'm very long on stocks, crypto, all of that. I think it's, eventually it's going to keep rising. But I think in the short term, it's going to be flat or down. And so that leads to some interesting opportunities. We can, as people running businesses in real estate or, trying to look for arbitrage opportunities, we can negotiate much harder right now. We can get deals that we couldn't otherwise get before. It's a harder climate to make a profit. There's no doubt. A lot of people will be scared off. A lot of people will lose their shirts, but the pros will get in there and still make a healthy profit. And the best part is this is a good time to build your systems. If you're watching this and you're like, hey, what do I do? I'm a real estate investor, buy my first, second property, or I want to get into this and do it big to unlock financial freedom, whatever your goals are. This is a good time to start building those systems, to start setting up for the bottom of the market where you can really get in and then apply leverage. Because remember, if you could buy a house, let's say for $20,000 down for 100 grand at the bottom of the market, and then we have a 30, 40% bounce, or eventually the next 5 years, let's say, real estate will recover. And if you're able to negotiate a really good deal under market, let's say it was worth 150 when you bought it, and you bought it for 100, and then now it's worth, you fix it up a little bit, it's worth 250. You bought it for 100, put 20 down, you've got 150,000 potentially in equity, less whatever your costs are, maybe 130, 120 profit. On a $20,000 down payment, that's a 600%, 700% return. And with real estate, your downside risk is very much mitigated because you're buying a $100,000 property and I'm wrong. Let's say the market takes 10 years. Real estate goes up over time. The government targets inflation of 2-3%. So no matter what, your money will devalue over time and your real estate asset will float up. And with leverage, you're 5 to 1 levered by putting 20% down. If there's 3% inflation, you make 14, 15% return on your down payment. So leverage is the key, cheap debt. However, we're in an interesting time right now where interest rates are 6, 7%, in some cases 8%. And that higher interest rate differential between the cap rate, and sorry, I just got a text. I was reading that while I was talking to you guys. It came up on my screen here. On the new iPhone 13, I forgot to I have a way that I can silence while I'm on YouTube shows, and I didn't do that, so my bad. I lost my train of thought here. Anyway, the interest rate differential between the cap rate on the property, so that's the net income on the properties are generating, and the cost of debt is getting so close to break even that no leverage right now you don't want leverage right now. You don't want a ton of it. A little bit's good. If you can buy properties, ideally you use leverage. So if you can find properties with high cap rates, so I'm looking in Florida where I can find properties that are 12 or 14 cap rate potentially, I can borrow at 6 or 7 or 8, and I still have a healthy spread there. But I can't go invest in LA, New York, Toronto, Vancouver, any of these bigger markets that have 4 caps, and go borrow at 6 or 7 or 8, unless I'm just speculating and hoping that the market will eventually recover, which it will, but it'd be a short-term pain, right? If I had to go through a period of 5 or 10 years where the property is just flat, I'd be losing every month with applying leverage to those properties. Those properties either need one to increase in income, which I don't see that happening because there's a lot of rent control in the large metropolitan areas. Tenants can't afford to pay double the rent to justify the higher interest rates on the mortgages. So that's not an option. You think about costs coming down. Inflation's running rampant. That's not an option either, right? The property taxes aren't coming down, utility bills aren't coming down, insurance isn't coming down. The cost of fixing the property up and maintaining it, not going down, going sky high. I can't even get materials right now. I was trying to get 2x3s today, and all I could get was 2x4s because the 2x3s were literally on back order. Some of the appliances I was looking at today, like 2 months back order. There's real serious issues right now getting materials, and that's another cost for the landlord. So you got to be very careful buying in these metropolitans. So I'm always buying. You guys know that I buy like a property a month, minimum, always. Even in a down market, at the bottom of a market, I want to buy even more. It's, right now I think we're still in a cycle where we're going down a little bit. So I'm not super, I want to buy a property a week. I don't want to go all in. I'm actually still selling some properties in my portfolio that are turnkey. The reason for that is because I have a special set of, to quote, the movie Taken, I have a special set of skills that, I could use to take down and be lethal, right? And he has this whole quote about how he'll come find them and kill them. Anyway, that was the quote I was kind of riffing off. But, I have the ability to take that capital and say I sell my sixplex, right? And I'm able to, unlock $1 million of capital in that. I could deploy that in 2 more deals that I buy at half price and revamp through putting in time and effort and getting people in there to fix it up and change the value out of it. That's what I'm good at. I can double that money over a 5-year period. Most people who buy real estate just want to buy something that's passive. They don't have to worry about it. They're not building a business around it. So for them, holding that $6 makes sense. For me, it doesn't, because I can do so much more with that money by continuing to recycle it into the next property. I wish in Canada there was a 1031 exchange where I could sell my sixplex that, has, say, doubled in value and go buy another property that's 50% of its potential ARV and continue to recycle tax-free from deal to deal. Unfortunately, I have to pay tax for now while I stay in Canada. At some point, I will leave Canada. The United States isn't that much better, to be honest. Like Florida it's better, okay? I mean, it's like 15, 20% better tax rate. Instead of 55%, you're looking at like 30 something, 5%. It's like maybe 38% for Florida. Bahamas is way better. There's no tax returns at all. So if you can flow income to a Bahamas offshore corp, or if you personally can reside in the Bahamas, you need 91 days a year to reside there, you could flow income and assets to yourself there tax-free. You'd have to pay some tax if you want to invest in the US. If you want to invest in Canada, you still got to pay some tax, but you can reduce that by not being a citizen. So that is my long-term plan. However, right now, there's a few things that are slowing that need to leave. One is I just realized while the market was down, I sold my portfolio, locked in like $1 million stock loss, and then got back into those positions at slightly different positions, because if we get into the exact same position, there are tax rules that apply. So I got the same market exposure by dumping those positions and re-entering. The same as in crypto. So I have like a $1.5 million capital loss that allows me to stay in Canada a little bit longer. As I have gains, if I don't sell, I can use this gain against my real estate stuff that I'm doing, and in theory, avoid some tax for a couple more years before I eventually do leave Canada. Not as I would keep my passport. I would still visit Canada. Summers on Lake Huron, beautiful. No other place I'd rather be. That said, I needed to get shit down here in Florida. I needed to line up stuff for the winter, so I had to make a quick 2-week trip down here. It's a business trip, and I had to do it. That said, it was I haven't hated it. I've been enjoying myself. But yeah, nothing better than Canadian summers. I just think the winters in Canada are the worst. So yeah. Hey guys, good to see you on. Is Florida as crazy as people say it is? In what respect? I guess to answer that question, is it crazy hot right now? Yes. Is it humid outside? Yes. Is it raining almost every day in rainy season? Yes. We're having thunderstorms like every day here right now. In the winter though, when I'm here, it's cool, mild, moderate. So yeah, it depends. Are people crazy? No. Most of the people have some nice southern hospitality. I would say that in general, they're in Central Florida here. They're definitely more right-leaning, which is fine by me because I'm pretty country, right-leaning kind of dude myself. So, my kind of people. But yeah, it's a different culture. Florida is like 5 different countries in one state. It's totally different in Central Florida versus Orlando versus Miami. Different vibe in the Florida Keys, way different vibe in Stewart or New Smyrna, different vibe in say, Jacksonville, Daytona, totally different vibe. And if you go all the way over to the other side, the other coast, you're talking a way different vibe in Clearwater or down in Naples, totally different, right? You got it's totally different places. I'm surprised at the same state, there's so much diversity within this state. So that's, when you say Florida, it's hard to be generic, right? You could be talking Hickville, redneck, or you could be talking hipstery, different young people vibes, or Caribbean vibes, or beach town vibes, or Disney, and then the whole, Orlando studios and Disney and all that. There's different vibes. Or the old retired vibe in Naples. There's a bit of that, I'm super posh and rich. Naples is actually the richest per capita city. Is it per capita or like, I forget the stat, but in one category, they're the richest in all of the United States. You might think it's like the Hamptons has the most, Naples, Florida, the most money. So interesting fact. People didn't know that about Florida having big money if you go to the right places. All right. Hello, Jonathan. Good to see you on. Are you considering getting an E2 visa? It's an option. Like if I continue to do deals down here and I have a partner down here in the US that I'll be doing a lot of my stuff with. I've already given him my word on that. So I'll be doing some big deals with that. There is the potential that if I own at least 50%, I believe, of the corporation, I can apply for an E2 visa through that just because the amount of general assets that it will have and income that it's producing. It's an active business, so I could, in theory, apply for an E2 visa, and I can come and go out of the US as much as I want. I would have to file a personal tax return, I believe, and the corporation does. I could avoid the personal tax return, I believe, if I own that US corp personally, and my US corp will have to file, but I personally wouldn't have to file. Ideally, I'd be personally be a Bahamas resident for tax purposes, so I don't file in Canada. I don't even file a personal tax return at all, because in the Bahamas, you don't file a tax return. There is no tax time. There's no reporting at all personally. That's huge, by the way. Just the time it takes to figure out what you owe is such a pain in the ass. I'd rather if the government was like, hey, here's a flat, like the Bahamas, they do this, right? You import stuff, you pay a flat VAT tax, or if you buy a good or service, you pay a tax. You buy real estate down there, it's like a 5% fee. In Canada, they do the same thing. It's like a 3% fee, but whatever. On top of that, Canada charges you prorated based on what you're making, whereas there's no capital gains or any of that in the Bahamas. So I think Bahamas is great because, again, if I can get my pilot's license, I can fly, and even if I didn't get my pilot's license, I can fly to Miami, Florida in like 20 minutes. It's a 20-minute flight. It's like literally driving across town, and I'm Bahamas to Florida. You could do like Monday to Thursday in the Bahamas, and then Thursday to Monday morning, or Thursday to Sunday night in Florida, right? Like you have that ability to go from the first world to the tax haven, or I guess Bahamas is paradise also. So that's the play. Like the Bahamas is where you want to be in the winter. Same with Florida. Rainy season, hurricane season, no, go down to Canada. Or I guess up to Canada rather, because we're down south now. You go up to Canada and you enjoy the beautiful weather. So you've got the only time to really escape, I think, is then. And then Costa Rica is a nice backup, second passport, I think. Tax residency, Bahamas, but having another passport in your back pocket in case the world goes to shit. If Canada and the US happen to go to war, I think Costa Rica is nice and safe. It's a place that's family friendly. It's a beautiful, most eco-diverse country in the world, actually, I believe, as far as like. +1 for leaving Canada. I mean, a lot of people want out. It's a great country, has a lot of great potential, a lot of good people in it. I love Canada, again, born and raised, right? But my grandparents, they moved to Canada, right? We're European, so we came from Germany, we came from Belgium, and we moved to Canada for a better life. And now it's to the point where I might have to leave Canada and go somewhere else for a better life, right? My ancestors were able to do it. I'd be able to do it too. Unfortunately, Canada's under really bad management. And there's a toxin sort of spreading in the culture around communism and socialism, and the idea that one shouldn't have to be productive or work, and that taking from someone who has more is morally right. Because they have more, they're morally immoral, I guess, is sort of the circular shitty argument. Basically, this leads to a collapsed society over time, and philosophically, I just disagree. Economically, it makes no sense at all. But a lot of these people, they don't care about money. They don't care about the economy. They don't care about medicine advancing or technology advancing. Some of the communists I've talked to literally say technology is a bad thing, and they would prefer to have Facebook, Instagram, and all those things wiped out and have no technology. And I guess they're cool with feudalism, where they become serfs again. Whatever, that's the cycle. Teach their own. I just think that Canada moving in and ushering towards this 60% tax rate they want, just not conducive for someone who, like me, who just like my base state is wanting to be productive. Like if I do nothing for like several days or a week on end, I can't. I'd be on MLS looking for a deal just for the sake of, I love the negotiation. I love taking down a property at a discount. I love the thrill of the game. I like to build. And so money comes along with that. And if I lose 60% of my chips, it's like, why even play? It's like at the end of the Monopoly game, if they're just going to take your money back, it's just, what fun is that? I don't know. I don't know, guys. I'm just rambling here. Someone says, I have 30K in cash. What should I do? Um, well, start dollar cost averaging into the market. I think that not right now, but the next big dip that we see in crypto, the next big dip you see in the stock market, it's a great time to start dollar cost averaging. Take 10% of that cash and start buying in. Take another 10% of that cash, start buying in. You could look at real estate and start negotiating some really good deals right now. Stuff's staying on the market for a month. I have agents calling me from a showings that I looked at a month ago saying, hey, do you want to put an offer in? We'd look at below asking. That was never a thing. For the last 3 years, I've had to like blood, sweat, and tears, fight off the wholesalers and fight off the realtors to find properties off market so I could just have a one-on-one conversation with a private seller to come to a deal or a private investor, right? Now it's like I can go on market and I can say to the agent, hey, here's 80 cents on the dollar. And they'll just they might even take the offer. They'll entertain it. And I'm like, you know what? Actually, you're going to finance it too at 3% interest. And sellers are like, if I can get my price, I'll finance you for 5 years, 3%. That's happening right now on large multifamily deals where you can assume their mortgage and they'll get a vendor financing. And so at 3%, it makes a lot of sense, even at 6 or 7 or 8 cap rate. So if you can negotiate the right deals right now, vendor financing is huge, a huge opportunity right now. Where when it was a hot market, the seller was like, nah, I'll just take my cash and go. Now you can say, hey, do you want to delay that? You've had this property 20 years. You got $1 million capital gain. Let's delay that over 3, 4, 5 years for you. Let's help you pay almost no tax. Let's get you some passive income. You're the bank. You get interest payments every month. If I'm wrong, you take the property back. No harm, no foul. So those types of deals, you present it to a seller now, and they have no one else courting the property. Before they had 4 cash buyers courting the property. Now they have no one courting their property, and you can have a conversation, and the underdog can get in there and can make a deal happen. So this is a really exciting time. It's how I grew up. It's how I came up in real estate, is being able to do that. And so I'm excited for those times again. It'll be harder, obviously, to make a profit if you're not good at what you do. If you let costs get out of control, if you just hire everything out and have bad systems, you have bad deals, you don't negotiate well, you might get slaughtered. But if you're careful, no matter what in real estate, if you hold for a long time, you'll be okay. The same is true for if you own the S&P 500. If you're suffering right now, you're down 20%, hold if you can for 5 years, right? But the answer, I guess, for your 130K is it depends on what your timeline looks like. If you want to have a property in the next 1 or 2 years to live in and house hack, maybe this crypto and stock thing doesn't make sense for you. Maybe a portion of it should go in those buckets, but a portion of it should go into the real estate thing, right? To each their own. There is no one set answer. It's like, hey, this is the thing you have to be doing. I don't have an answer. It's for each person their own. So what's your timeline look like? Can you hold 3 to 5 years if you had to? Will it keep you up at night if it drops another 20%? Real estate's a nice thing because you don't look at the value of it all the time. You're just looking at the income you're producing on a rental, from the rental every month. So that's something where the property could drop 20% in value. You don't even notice it. It doesn't bother you. That's a nice thing about real estate is that asset class, you're not like checking the market price on it every day. Whereas like you log in your stock portfolio and it's depressing. Every day I log in lately and it's like, I'm down. I was actually out for the last couple months because I was shorting, but anyway, probably wrap this up, get some food in a sec here because I am marved. I'm hungry. And we're in this beautiful historic area and it's some cool little boutique shops and stuff. And I'm excited to get some frozen custard after dinner. So I'll probably do one more question and wrap it up. Philip's family says, could you explain how you save on interest purchasing a property through tax deductions? I'm not 100% grasping how that works. Okay, so how I save on interest. So do you mean like how it's tax deductible? Okay, so any expense that you have related to the property, you can claim against the rental income, or if it's related to a flip or related to the sale or holding of the property, let's say it's vacant, you can potentially claim it also against the capital gain that you'll eventually have when you sell. Or you could create a capital loss, which case you could use that to offset other income, say your day job or other investing ventures that you're taking on. So the interest, let's say you're paying 6% interest, if you're at, like I am in Canada, the 50% tax bracket with an active business or 55% tax, on 6%, I really only pay like 2.8% of that because I'm getting 3.2% back as a tax deduction. However, if you run the math on that, if you're at a 20% tax bracket, let's say you have an active corp making 25% tax rate, you don't have the same income I do, your tax deduction would be less. So I know a lot of people throw out this number like, oh, it's a write-off. It's a write-off, so who cares? Like I'll just spend $1,000, it's a write-off. Well, I mean, in my case, a write-off gets me $550 in tax savings if I spend $1,000. So yeah, I mean, I get 55% off whatever I spend because I literally can claim it against my tax bracket. So spending isn't all that bad on interest if the leverage can be used to help you make more money. it's great to have the tax deduction. If you owned the property in cash, you wouldn't have any tax deduction. So I definitely recommend applying leverage, so long as, this is the rule, you have a clear plan to service the debt. So it's producing cash flow that can service the interest. If it isn't, you should sell the property. 2 is a clear, sort of differential between what the property can generate, return on asset, net before debt, and the cost of debt being lower. So that pretty much means that any property in Vancouver, Toronto, LA, most of the major metropolitans in North America are pricing properties at 3, 4, 5 cap rates, and they're lending right now at 6, 7%, right? For the most part, there are some exceptions with variable mortgages still being at 3.5, 4, 4.5, 5, in that range. So there is, I guess, still some play, but if interest rates go further, you should do sensitivity analysis and make sure you can continue to carry that property. When I get into a property, I look for 3 main strategies. So I always have a hold that cash flows. I always have an out as a flip. I can flip it to an investor. I always have like an Airbnb or some sort of, third sort of option if rental income doesn't make sense. Usually it's a higher cash flow option that requires more effort. But typically I'm looking for a way I can refinance it, or a way that I can take the capital and, recycle it onto the next deal, worst case scenario. So I'm buying at enough of a discount that if I'm applying leverage and the property is not producing cash flow, it's because I know that the property is, say, worth 25% more on sale, and I have that profit margin there, and I've just factored that interest cost, that carrying cost into my flip, even if it's a long flip. So yeah, hope that helps. So a personal home will help you as a capital loss deducting from income. No. So in the US, yes. In Canada, you cannot deduct the interest on your mortgage unless you apply the tax maneuver called the Smith maneuver. And the Smith maneuver is written by a guy, something Smith. Basically, the idea behind it is that you would take a mortgage on your property and you would show those funds that you borrowed against that property were used directly to invest in stocks, real estate, business ventures, something else that produced income for you. And you have to show that that income was borrowed from your HELOC and used directly for that investment purpose, in which case then your personal mortgage becomes tax deductible. That's called the Smith maneuver. You take debt that's personal, which wouldn't have been tax deductible on your mortgage in Canada, and make it tax deductible by using it for business purposes. So that's often why I'll buy a property in cash and then refinance it and use those funds and show them going right into my investment account, or right into buying another property, or from my investment account into buying another property. And I can write off 100% of that interest, which would give me about a 50% tax savings at my tax rate. That takes my 3% mortgage down to 1.5% effective after tax. That's good debt. Hopefully that helps. Thank you, by the way, for the super chat. Sweet, $10. So that's awesome. Anyway, I got to wrap this up, get some food. So it looks like there's no other questions anyway. That kind of works out nice. If you guys have any questions, you know where to find me. On Facebook, I'm Mike Rosehart. Look for the little blue check mark. I got verified on Facebook. For some reason on Instagram, I'm not verified, but I'm Mike Rosehart. You can find me there too. Also at rosehartcapital@gmail.com. You will find my email if you want to reach out to me that way as well. So yeah, check out the Smith maneuver. Pro tip: if you had to say $1 million house in Toronto or $1 million mortgage in Toronto, and you're paying 4% interest on that right now, or 5% interest, that's $50,000 a year in interest. You could deduct. That's $25,000 a year. That's over $2,000 a month in your pocket in pure tax savings from the government that you're going to have. Either you can use that against your day job income, whatever. So that's smart use of your money. You want to apply that strategy, and a lot of people aren't. And it's a shame. That's leaving $2,000 on the table, or more than $2,000 potentially every month in tax savings on the table. So yeah, definitely apply those strategies. Don't let the tax tail wag the dog, as they say. So live your life and continue to do things that you would do otherwise without tax. But if you can optimize for tax, bonus. Anyway, thanks so much for watching, everyone. You guys know where to find me. Still got the surfer vibe going. My hair is actually super long. As long as I've had it in forever, I can actually put it in a full pony. So that's kind of cool. It's like, okay, show you guys. It's like almost 10 inches long at some points. I've cut the front because it was getting in my eyes. It was like down to here, so I just cut it. I haven't had a haircut in a year other than the haircut that I gave myself. I haven't had a haircut at a barber in like 3-4 years, just because like the effort to go find a new barber now, because I've lost my other barber. He closed. And literally the effort to do all that, and to, it's not even the cost to do it. It's just the time to go find a barber and spend 30 minutes in the waiting room, then wait an hour, get a haircut, and drive home. Just cut it myself when I get a chance. But I've just been enjoying the surfer vibe. Like, just fuck it. Who do I got to impress? Like, does it matter if I have long ass hair? It's obviously a fucking mess right now, but whatever. Someday I'll probably be bald. You know, my grandpa's, my grandpa went bald. One of my grandpas is bald. One of my grandpas isn't bald. So we'll see what happens. Maybe I'll go bald. Maybe I won't. But coming up on 30 in a few months here. So blessed that I haven't lost all the hair yet. If it happens, it happens. Whatever. All right, everyone. We'll see you next week, every Wednesday, live, 7 to 8 p.m. No matter where I am on the earth, I will come live to you. That is something I try my very best to do. I've come on Christmas, Boxing Day, holiday, when I was sick, no matter what, even when I had COVID, day 3 of after positive COVID test, I literally came on here. I was like, I feel like shit. You can check that video out. I was in Florida earlier this year when that happened, the second time I got COVID. Anyway, thank you for watching, everyone. We'll see you next week. The secret to unlocking wealth through you, 3 levers in your control your financial future. Spend less, earn more, maximize returns, the difference. If you're interested in investing with me, I'm looking to begin ramping up as we meet the bottom of this market. You could ride that with me and invest with me in my active business. I'm looking for investors. I can put up property as security. I can also just give you a GSA and you can invest in my business, general security of assets. If that is something that's interesting to you and you want to put some capital to work, minimum $250,000 in capital, hit me up. I'd be happy to discuss partnering. Yeah, that's my shameless plug and ask of y'all. Thank you for watching. We'll see you next week.